Welcome to Market Call. Thanks for joining us today. I'm Morella Fernandez. Julien Nono-Womdim is on the show, Vice President of Equity Analysis at Goodreid Investment Counsel. He'll take your questions on U.S. equities. Here's how to reach us today. Call 1-855-326-6266 if you'd like to phone in. If you want to email your question, you can do that to marketcall@bnnbloomberg.ca. Julien, thanks for coming in.
Thank you for having me.
Okay, let's talk a little bit about what we are looking at in the markets. I know you gave a good reference about an object in motion stays in motion, which is how you see the markets right now. What do you think is keeping the bulls on the run?
Yeah, I think, as you say, an object in motion stays in motion. We're kind of back in school season. I'd say that there are two drivers for the market from our view. The first is the investment in AI, and the second is rate policy. Just talking about AI, we just came off of Q2 earnings across the board, whether it's technology companies that are talking about demand outpacing supply, whether it's the industrial companies, sort of the physical companies that are building the infrastructure, they're saying that demand is very strong. And lastly, even on the power and infrastructure side, we're seeing shortages. All those things are corroborating a continuation of that investment cycle. Secondly, on Fed policy, as you've seen in recent weeks, data around the U.S. economy is deteriorating somewhat. And as a result, there is an expectation that the Fed will ease in the next couple of days. And that is further supported by the fact that inflation has not been accelerating.
There are some who worry that the spending on AI, the billions and billions of dollars being invested there, aren't showing up in revenue yet and may not show up in sort of a balance to what is being spent on AI. Is that a concern for you at all?
Well, of course it's a concern. I mean, we have the remnants of 1999 and prior cycles of massive investment. What I'd say is, unlike prior cycles, the companies that are making these investments are very disciplined. They're increasingly disciplined. Let's take Microsoft as an example. Last year, the stock actually underperformed the S&P 500. Part of that was because the market was concerned that a lot of their CapEx was not going to be productive. What we've seen this year is that they've shifted some of that spending on OpEx, partnering with AI-specific service providers, and therefore the expectation that CapEx will be rational has improved, and therefore the stock is being rewarded.
Let's talk about Fed policy, because you mentioned that is also giving a boost to the markets and investors. Do you feel assured of a rate cut both in Canada and the U.S.?
Well, yes, certainly in the U.S. I don't pay too much attention to Canada, even though I live here. I'd say in the U.S., it's pretty clear the market is oscillating between 25 and 50 basis points. I think, prudently speaking, there's no reason to go more than 25. Inflation data is contained. The labor market, as we talked about, is weakening somewhat, and that should provide them with a reasonable case to cut rates. And to add to that, as you know, the U.S. administration has been pretty vocal about Fed policy, and when you sort of combine all those three factors, there's really no reason for the Fed not to cut rates. So
a 25 basis cut point, you're thinking this week, others to follow?
Others to follow, sure. I mean, globally, we've been in a rate-cutting cycle. We think that persists. That should be supportive for the reacceleration of growth next year, and certainly for liquidity for the markets.
All right. We are going to take a quick break. We're going to line up some phone calls and some emails for Julien Nono-Womdim of Goodreid Investment Counsel. He's taking your questions today on American equities. Here's how to reach us. We're back in a moment. Welcome back to Market Call. We are going to begin today with an email from Tony. He says, could I please have your thoughts on Micron? We'll pull up the Micron chart in just a moment, but is this a company you've invested in the past?
It's one I've invested in the past. Thanks for the question, Tony. The drivers for Micron are twofold. The first is, where are we in the memory cycle? And the second is, where is Micron from a technology perspective relative to its competitors? And just for context, Micron is the memory semiconductor company. With respect to the memory cycle, we just came off of a pretty bad memory down cycle following COVID. And now with AI and with the move towards inferencing, the demand for memory is going to accelerate. And so we think we're well positioned on the memory cycle. Second, with Micron specifically, the industry is a bit of an oligopoly. There are three key players: Micron, SK Hynix, and Samsung. Micron and SK Hynix are leading. Samsung has actually faltered despite having a bigger market share. And so we think Micron should continue to do well.
Okay. Hope that helps Tony make any decisions. Let's go to John in London, Ontario with a question. Hi, John.
Hello, Marilla. Hello, Julien. Thanks for quoting Newton and his first law of thermodynamics. Let's go to the second law, force equals mass times acceleration. Google price is accelerating. They got past the demands to sell Chrome. They beat that. They beat on earnings and revenue, and they're up again today. I'd like to add to it. I've owned it for quite a while. What do you think about 2 to 3 year hold or add? Thanks very much.
Okay, so we will pull up that line chart as well. Is it hard to sort of know 2 or 3 years down the line what a company is going to do, considering when they give their guidance, they only give their guidance for about 18 months, pretty much?
I think 2 to 3 years is actually the sweet spot for a long-term investor. The reason is twofold. First, most investors are focused on the quarters, and on any given quarter, who knows what's happening with macro. Sometimes revenues shift from one quarter to the next. So the quarterly game is actually far more challenging. The second reason is that the value of any business, 70% of it is in the long-term cash flows. And so I think on a 2 or 3 year time horizon, it is generally easier, or at least simpler, to formulate a thesis. Now, sometimes, you may not sort of know until the end of that period, but back to Google, you're right. The acceleration is remarkable. From our perspective, there are two factors that matter most for the company. The first, on the regulatory front, there was this concern that Google was a monopoly in search and that they were sort of affecting competition. And the second was, from the investor community perspective, that AI was going to displace search. So you have this fight between the regulatory perspective and investor sentiment. Well, both of these risks have effectively diminished substantially. On the regulatory front, the case for a monopoly in search can no longer be made. And secondly, and more importantly, on AI, they've made some significant inroads, and they've demonstrated that they can compete in a world of AI. And so we like Google, we own it, and we'll continue to do so.
Explain a little bit more for me, please, how AI, if it will be incorporated with Chrome, or how they're going to be able to sort of beat back searches done by AI.
Well, I think AI mostly to do with Google GCP, not so much on the consumer-facing front, but I think the debate was whether or not search on its own was going to be displaced.
Would be useless for people, yes.
Effectively. That's not what we're seeing. We're saying, yes, there's a shift towards AI, but more importantly, the sum of the parts value of the company is a lot greater, and we think that can be realized, if that makes any sense.
So not as much focus on the search, so it's not as much of a concern when they've got other things going on.
Correct.
Okay. We hope that's good for John. Let's go to Charlie in Montreal. Hi, Charlie.
Hi, thank you for taking my call. Today I'm calling about Novo Nordisk. I took a small position, and it's only been going down, so I'm 15% in the red. Do you think this is a hold? I saw a previous guest talk good about Novo Nordisk. The fundamentals seem good, but is there something I'm missing? Or I'd like to know if I hold on to this or just get rid of it. Thank you.
Okay, Novo Nordisk had their obesity drug out, but now I feel like everybody else has their drug out, and the competition has made it pretty hard for them to come back.
Yeah, I think if we take a step back, think about the industry top down, what Novo Nordisk does really well is effectively fighting all diseases related to chronic metabolic syndrome, so diabetes, et cetera. And in recent years, their strength in GLP-1s was what drove the company, drove the business. And there was this expectation that GLP-1s would sort of proliferate significantly. It would be maybe a duopoly between them and Lilly. And there was debate around the form factor of the medication. But this is a classic example of Wall Street getting extremely excited about a company on an earnings cycle that lasted, call it 2 or 3 years. And since then, we've seen disappointment after disappointment. Yes, there's been some management changes. And so the stock is now at 52-week lows. But if we take a step back, irrespective of the policy environment, irrespective of competition, their leadership in metabolic disorders is still there. And we believe that in time, that they will recover and sort of go back to trend. We don't own it. We do not believe that the company is a timely investment. We have a view and a perspective on the quality of the asset, which we think is very high. However, the market only rewards companies that are executing in the here and now or over a reasonable time frame, and that's not the case for Novo Nordisk. We're on the sidelines. We like the company. We think that they can get out of this sort of transitory period, but it's a wait and see for us.
Beyond growth sort of around the world for this kind of drug as it rolls out, are there iterations of the drug to come, meaning sort of the oral form, that these companies will roll out that will bring more sort of growth and demand for what they offer?
It's quite, well, there's certainly a rollout on orals, and there's certainly going to be different modalities. I think even more importantly, the mechanisms of GLPs are probably going to sort of be expanded to offer more novel drugs, whether it's around metabolic syndromes or other things. So that's a positive. That's always been the case. With respect to Novo specifically, I think it's going to have to be a wait-and-see approach. Pharma has always been very competitive. As you know, we go from phases of patent exclusivity to phases of generic drugs, and that's normal. That's part and parcel for the industry.
Okay. Julien, sticking around to take your questions and your calls on American equities. Here's how to reach us. We're back in just a moment. Stay tuned. Welcome back. Let's go to an email from Charlie. He says, would you be a buyer of Bank of America right now? Where do you stand on financials moving forward?
Thanks for the question, Charlie. Bank of America, we own it. We like it. I think generally speaking on the financials, we're pretty positive on the space. As you know, financials are effectively the arteries of the economy. When the economy is expanding or contracting, that sector is effectively reflects that. Going back to our earlier comments on the Fed policy decision with cuts, that should be supportive of net interest margins for Bank of America and for the financials. Generally speaking, on the most recent quarter, the company sounded relatively positive. And as you know, even their wealth management segment is doing well. So we like it.
Okay, let's go to Mike then on the line in London, Ontario with this question. Hi, Mike.
Hello there. I just have a small question for your guest about General Motors. I've had it since 2018. I've been down most of the time. Any chance of it going back up, or should I just get rid of it?
Okay, so let me say it's really hard right now with automakers, right? I feel like there's so much going on between the lowering demand for EV and they all have to push towards EV. You have tariffs affecting the North American supply chain. So what do you do with a stock like GM right now?
Well, that's a question we're wrestling with as well because we own it. I think there are a couple of contrasting factors. Everything that you mentioned, number one, whether it's the supply chain, which is sort of in flux, whether it's consumer demand, which is also in flux. And the second thing as investors is that the valuation on the stock is very cheap. It's very cheap. And if we zoom out 3, 4, 5 years, do the current fundamentals and the perspective of long-term fundamentals, are they reflected by the valuation? And we think not. We think it's cheap, hence why we've held it. We continue to do so, but certainly we acknowledge the challenges with the company.
Do you feel like the North American supply chain issue will be sort of thrown up in the air, dislocated because of what's going on and the push to move manufacturing just back to the U.S.? Do you feel like there's going to be cuts in the line and things are going to have to reset?
That's a challenging question.
It is a challenging question.
I'm a bit of an optimist, and I'll say that it's very hard to disintegrate very complicated supply chains. A few years ago, we saw that in the semiconductor industry when there was a talk about sort of shifting away from Taiwan. If you fast forward 4 or 5 years later, supply chains haven't really changed that much. Yes, there's been some movements back into the U.S., and I suspect that 5 years from now, when we'll be talking about autos, the back and forth between the U.S. and Canada will be largely unchanged.
Okay. Let's go to another email from Dave. Dave says, I've been a holder of Visa since 2010. I have true belief in the company. Does recent weakness present a buying opportunity? Visa's been trading sort of sideways for a little bit. But if he's held it since 2010, he's obviously done very well. Is there more upside for Visa?
Yeah, so we own Visa. I'd say it's a great company. Obviously, the key benefit historically has been the transition from cash to card. But the reality is, over the last 5 years, the stock has underperformed the S&P 500 by 30 points or so. Same thing with MasterCard. On the positives, these companies are adding more sort of value-added services, so fraud, security, et cetera, which are growing quite nicely for both of them. But ultimately, the value of a business is, as I said earlier, in sort of the long-term cash flows. What are the prospects there? Are they accelerating? No. Are they stable? Yes. And so I think we do have better opportunities elsewhere, but we hold it.
And you're just going to continue to hold it?
For the foreseeable future, it adds stability. It adds stability to the portfolio.
Okay. Let's get into another email coming from Don. He says, I'd appreciate your guest view on Linde. I'm not familiar with it. Linde,
yes. Yes, an industrial sort of chemical company.
Got it.
Yes. An exceptional operator. They focus a lot on sort of various sort of large infrastructure projects around the world. They are known to have a very strong discipline around capital allocation and underwriting the appropriate IRR for their projects. And so as you know, when you're building things, a lot of things can go wrong. They've had a sort of a track record of discipline. We like the company. We like the management team.
Okay. We are going to take a quick break then. Julien is a new guest from Market Call, so no past picks on the show today. But we will talk about a sector that has been underperforming and whether Julien sees a pickup. We're back in a moment. Welcome back. We are here with Julien Nono-Womdim. No past picks for him. He's a new guest on Market Call. But we do want to talk about some of the unloved stocks this year. Healthcare being one sector that has been left behind. Why do you think, Julien, healthcare has been so ignored this year?
Yeah, healthcare has been it's been a house on fire, effectively.
Yeah.
And I think the reasons are threefold. First, on the regulatory front, the new Trump administration has been pretty vocal about making sort of meaningful reforms in healthcare. The second is around the tools companies. They've been sort of dealing with a hangover following strong demand during COVID. And lastly, it's been a whole host of idiosyncratic things across the sector, along with the fact that healthcare is a bit of a defensive sector. We've been in a bull market. Investors have found better places of growth and acceleration, as one of the guests pointed out.
And people feel like they need to get in on that, or maybe taking money out of healthcare to go there?
Correct.
Okay. Let's talk about the companies or sectors that are adjacent to that, because we talk about healthcare and we think of something like UnitedHealth here in the U.S. But
yes.
I feel like that stock has been having its own personal problems beyond sort of the big picture here. Do you think that's why it remains so beaten down?
It's beaten down. Yes, there's some element of idiosyncratic factors, but realistically, it has to do with the overall sector. I think there's been a great deal of cost inflation for the medical space in the U.S., and so the view historically is that UNH is able to have a pretty steady cost curve in terms of their medical loss ratios. So when you sort of how much do they make on insuring policies, and that's been volatile because every time they reprice, on the back end of that, there's cost inflation at hospitals, cost inflation on the medical device side, and therefore the stability of that business has gone down. In conjunction with that, you've had concerns that they're not providing patients with the adequate care, again, in an attempt to contain costs. But ultimately, it speaks to the fact that whether it's in the U.S. or globally, while this aging demographic tailwind has been a positive and will likely continue to be positive, we have to offset that with the fact that it increasingly costs more to the system.
Okay, so that's part of it for healthcare. We're seeing some of that touch pharma as well.
Yes.
We talked a little bit about Novo. What about stock like Merck?
Right.
Are they in that same sort of basin?
Well, they're in the basin of patent cliffs, and so they have a massive sort of oncology drug, and investors are looking forward over the next 5-10 years and saying, well, what's next? They haven't been able to come up with something else. Unlike other sort of more traditional businesses, pharma is quite unique in the sense that if you make $100 of revenues today, within a sort of predefined time frame, a good chunk of those revenues are going to go away because of the loss of patent exclusivity. And consequently, there's always this treadmill to innovate. And that as a result, means these businesses tend to trade very, very cheap relative to the market, as they should. And secondly, they need to sort of do deals, M&A, or innovate internally. We haven't really seen a lot of that from Merck, and that the hope is that they will sort of get back on that.
Okay, so do you feel like some of the movement will go back into those stocks? Is this like a cyclical thing, or are people so taken with AI and tech that they're not even looking?
No, eventually, we're of the view that they'll look again. And the reason being, when a house is on fire, yes, everyone runs for the exit door, but eventually the fire stops, and there are some valuable assets that are generally left. And so when the dust settles, when the regulatory picture clears, when we start lapping some of those difficult compares on the tool side, there will be assets, there will be sort of companies that are gonna benefit. And the reason being, as I mentioned, the aging demographic backdrop is still positive. Innovation in the industry is actually really, really positive. We were talking about GLP-1s earlier, and that will continue. So the long-term thesis has really not changed. We're just going through a cycle.
All right, Julien Nono-Womdim of Goodreid Investment Counsel taking your questions today on American Equities. We're back with your phone calls and your emails in just a moment. Stay tuned. Welcome back, and thanks for joining us. Bally's on the line from Newmarket, Ontario, with a question. Hi there.
Hey, thank you. Hey, Julien. It's a pleasure to see you here. I just want to check, right? There was a large narrative with all these, stocks in like Tilray, and I want to check about Canopy Corporation. So what's your take on that? Do you guys own it? There's a lot of investment which has gone into this area, but suddenly this industry has just been quiet for a while. So what do you suggest?
Okay, so let's talk about Canopy. Does Canopy, do medical as well as recreational? I'm not sure anymore.
I'm not really sort of familiar with the specifics on Canopy. Thank you very much for the question, by the way. What I'd say is, from an investment perspective, the value of any asset, any business, is the returns that they can generate on the investments that they make. Cannabis is an industry, unfortunately, while there's been a lot of capital that has chased the sector, the returns on that capital have been extremely weak. And the reason being, it's a commodity. It's an undifferentiated commodity. And as a consequence, though sort of on the regulatory side, there's been a push for legalization across various jurisdictions, we simply just don't see it as an investable universe. It's more of a speculative area, and that's really what we've seen. I think we need to see very significant and sustained consolidation in the industry before we even thought of it as something to spend some time on.
And are you looking at the U.S. market specifically? Because there's been a lot of talk, and I know a lot of Canadian growers and businesses here are waiting for something to happen to the U.S. that'll spur their growth.
Correct.
Do you see that happening, and is that something you still would not take an investment in?
Well, probably not. And the reason being, to your point, there's already a lot of capital that is front-running the regulatory sort of improvement to come. Typically, you want it the other way. You want investors to be caught off guard by an improvement in the regulatory backdrop such that those that were prepared ahead of time can actually benefit from that inflow of capital. Unfortunately, we think that the industry has already seen way too much capital. A lot of that capital has been destroyed. There's a lot of idle capacity, and we don't see any fundamental improvement suggesting that the return profile is going to improve.
Got it. Okay,
Yes.
let's go to Faisal on the line. He's in Toronto. Hi, Faisal.
Hi, good afternoon, Mirella. Good afternoon, Julian. Julian, welcome on your inaugural visit to
Thank you,
BNN,
Faisal.
and we hope to see you more often. My question is on Applied Materials.
Yes.
It has sold off from 200 to 170, and is stock that this has been due to competition from China and the tariffs from China. Has the sell-off been overdone, and would you be looking at this 170 point as an entry point? I'll hang up and listen. Thank you.
Thanks,
Okay.
Faisal. Thanks for your question. I appreciate it. Generally speaking, when I'm investing in an industry, and as you know, Applied Materials, a leading sort of wafer fabrication equipment company that is sort of well balanced between different steps of the manufacturing process in semiconductors. While it's a good company, we like it, and we think that longer term they should do relatively well. Our preference in the space is actually a company called KLA Corporation. The reason being they have a more overwhelmingly dominant space in their subcategory of WFE, wafer fabrication equipment. And so AMAT, probably more of a hold. Our preference is for something like KLA Corporation.
And that I haven't looked at where KLA is, Tencor?
KLA, ticker, yes.
Okay,
ticker
so
CLAC.
KLA. Because would you step in at the point, is that now?
Oh, yes, I'd step into CLAC. I'd even step into LAM, yes,
Okay.
over AMAT.
So it's at 975.24. It's up 11.22, so up more than 1% today and 29% over the year. Okay, KLA Tencor. Core. Thanks for that. Let's get one more email going from Randy. He says, is it still a good time to purchase JPMorgan with that big price increase? And we're having a lot of that where people are like, okay, this is where the stock is at, and they
Yes.
think there's more upside, and they want to know whether they should step in. What about JPMorgan?
Yeah, so you've been doing this a long time. So maybe, like, how many times have you heard people say that JPMorgan is too expensive over the years?
Yes, it's like Visa, right? People say it's one of those stocks, but it keeps climbing.
Yes, and I'd even separate them a little bit, because in the case of JPMorgan, clear strength in its leadership and the management team, and they know exactly what they're doing. They have a dominant sort of marketplace position in the marketplace, and they continue to execute. Yes, the basis for investing is for stocks to go higher. Investors tend to complain when stocks go higher. No, we own JPMorgan. It's a cornerstone in our portfolios. We like it. We recognize that it's a bit more expensive relative to peers. We also recognize that in this easing cycle, other financials will likely do a little bit better, perhaps due to some sensitivity around NIMs and cheaper valuations. Think of the regional banks that may benefit from deregulation. But on a medium to longer term basis, there's absolutely no reason to not like the company and the stock.
All right. Let's hope that helps Randy as we go to the phone calls from Jack, who's on the line in Thornhill, Ontario. Hi, Jack.
Hello, yes, good afternoon to both of you. Just wondering if the nice guest will let me know about the Brookfield management, BAM, if it's a good one to keep or to sell, and if he owns it. Thank you very much, and have a good afternoon.
Thank you for the question. Brookfield Asset Management. Do you own any of the Brookfields?
Yes, we own BAM in our Canadian portfolios. Our portfolio manager, Donnie Moss, likes the company quite well. And the reason being is in recent years, there's been a big push towards alternative assets, infrastructure, even AI, et cetera. In this search for yield and in this search for duration, institutional investors typically sort of, whether it's pensions, et cetera, they have to match the liabilities, so their pensions, and they have to have assets that are sort of longer duration as well. Brookfield has carved itself a specialty, and on BAM specifically, they generate fees on the assets that they manage. The asset base continues to grow. The company continues to execute. With respect to sourcing assets, they have a long and demonstrated history of being counter-cyclical acquirers of high-quality assets, and we like it. We like it a lot.
What kind of assets do they look at generally? You mentioned sort of they are in different sectors now, so I'm just wondering if you can give me an idea.
Oh, they're in pretty much everything that's in the sort of physical world. I think they talk about the 3 Ds: decarbonization. Decarbonization, so think of sort of wind and solar farms and these types of projects. Digitization, they have data centers that they partner with. They have partnerships with various companies on data centers. And I forget what the last D is, but effectively, any infrastructure project around the real world, they have a pretty meaningful sort of presence in.
Interesting. All right, we are going to take another quick break. Back with your questions in just a moment. Stay tuned. Welcome back. Let's go to Jack on the line from Montebello, Quebec. Hi, Jack.
Hi. I'd like to ask about Taiwan Semiconductor. It seems to be stalled out a bit at around the 260 level, and I'm wondering if there's potential to go higher.
Okay, thank you for the question. Taiwan Semiconductor, everybody's buying in on semiconductors. What do you think of this company?
Yeah, we like TSMC, and the reason is twofold. First, if you go back, let's call it a decade, you actually had competition at the leading edge between Intel, Samsung, and TSMC. And over time, TSMC has clearly demonstrated to be the overwhelming leader at the leading edge in semiconductors. And so they have a strong sort of presence with their customers. The second one is the industry over time has shifted to a fabless structure, meaning semiconductor device companies don't manufacture, they sort of manufacture externally. So NVIDIA, AMD, TSMC is actually their manufacturer. And as a consequence, every semiconductor company that has a roadmap or an aggressive innovation roadmap effectively depends on TSMC. That is a very, very enviable position to have. They're talking very positively around the AI cycle. We know that there's potential for margins to rise even higher in the quarters ahead. We like it. There's no basis to turn negative. I mean, prices don't go up in a straight line.
No, just wondering about Donald Trump's semiconductor tariff, which is constantly being threatened.
Yes.
And we know that he starts off big and he wants to talk about 100% tariff.
Yes.
Because that could slow things down. Any concerns around that?
Well, ultimately, it would slow down the U.S. economy. It would slow down the U.S. markets, and we know he's used the markets as a barometer for policy success. So, which is it? Yeah. Okay.
Let's get an email from John. John says, I bought Thermo Fisher earlier this year, sold it after it popped after its last quarterly earnings. Should I repurchase in advance of the next earnings report? So they do scientific instruments, pharmaceutical, biotech, that kind of thing. What do you think? I mean, this is sort of adjacent to what we talked about, healthcare and pharma.
Yes.
What do you think of Thermo Fisher?
Yeah, Thermo, it's a company we like, and we've been sort of debating that idea internally of whether or not we get involved. From our perspective, we like to see a consistency in results before sort of engaging in a name. The company is of high quality. The industry, again, benefits from innovation in drugs, the shift to biologic drugs as opposed to small molecules. So on a multi-year basis, there is a strong case to be made that the industry is likely going to do well. The question is that they've been sort of overshadowed by cyclical forces, the slowdown in China, which has slowed down the organic growth rate of the business, and also, as I mentioned earlier, the unwind from COVID-related vaccines. With respect to your question on the quarter, frankly, I have no idea. I mean, it's a coin toss. Longer term, we're waiting for the company to become a bit more consistent. The valuation isn't cheap enough for us to say that we can disregard the near-term bumpiness, but we do like the company.
So it shouldn't, one you said you're just keeping an eye on.
Correct.
All right. Let's go to our next caller. Perry is on the line from Toronto. Hi, Perry.
Yes, hi. Thank you. I just don't know what is RBA doing it. Which company is it? What is the business? Thank you very much.
Okay. This is RB Global. What do they do?
RB Global, yeah. So they have a couple of businesses. They are a equipment salvage auction company. So they heavy equipment for various industrial activities. They auction those off. And they also have a complementary business that they acquired a few years ago, IAA, which is a auto salvage auction house effectively. So when you get into an accident, your car is effectively, your insurance company sells your car. Yes, exactly. They sell it at auctions for the parts, et cetera. RB Global does that. The business has been doing quite well, especially since the acquisition of IAA, which competes with another company, Copart, and they've done a good job of regaining market share that they had lost under the prior IAA management team. So, good company, in many respects counter-cyclical. If you think about it, it doesn't really matter what the economy is doing. Accidents are going to happen, unfortunately, and they clip a little coupon against that.
Do they have room to grow here? Are they only in the U.S.? Are they North America? Yeah,
they're in North America. There's reasonable growth, yes, through a combination of pricing and volume away from independents, and even from their large competitor Copart in the IAA piece. They appear to be taking market share, and so if you actually plot RBA versus Copart, you see a pretty meaningful spread, and that speaks to the execution that RBA has been having over the last couple of years under Ian Kessler, I believe, as the CEO.
All right, I hope that helps Perry for the question. We say thank you for that. William is next on the line. William is calling from London, Ontario. Hi, William.
Hello, good afternoon. I'm interested in your opinion on Exxon. I've tripled my profit on it already. Should I continue to hold it?
Question?
Yes.
I think it's Is it Axon?
Axon, yeah.
Okay.
Yeah, I suppose that's the appropriate pronunciation. As you know, they're playing a critical piece in public safety with tasers and the consumables for those tasers. Particularly in the U.S., you know, law enforcement is a very tenuous issue. They have a solution for sort of, let's call it, less invasive ways of apprehending people. The business has done well. They're sort of doing really, really well. The valuation is somewhat extended. And to your question as to whether or not to hold, I'd say, it's a contingent on your ability to withstand volatility. It is a relatively volatile stock, but we think the business is great.
Do they provide the hardware and the training? Is that sort of what they do?
Yes, exactly.
So physical taser guns,
yes,
and then they train the officers. So some of that will be sort of constant, right? If they're constantly training or retraining.
The part that is recurring primarily is actually the cartridges for every time you use the taser, yes, you actually have to refill the cartridges, and so that creates duration to the business. Once you get the hardware, you can't really fill it with different cartridges. You have to use the OEM version. Yes, so there's a lot of enthusiasm around the name and the company, and the valuation is too rich for our liking, but we appreciate the inherent qualities of the business.
Are tasers more popular these days? I mean, they've been out for so long now. It's hard to think about whether or not there's room to grow in that market.
Well, I think there's room to grow, not just in North America, but even eventually globally. I think there's a lot more scrutiny around police brutality and things of that nature, and so it may not be a function of popularity, but rather a function of policy and where sort of the world is shifting.
Got it. Okay, we are going to take another quick break. When we come back, Julien will share his top picks. Stay tuned for that. Join us tomorrow on Market Call. Andrei Omolchek will be on the show. He is CEO and CIO, Lion Guard Capital Management. He'll take your questions tomorrow on North American equities. And if you missed Market Call, you can check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Time now for Julien to share top picks. We're going to start with Piper Sandler on the New York Stock Exchange, PIPR. Tell me what you like about this company.
Yeah, our thesis is really predicated on three factors. The first is we've been in a sort of IPO recession for the last 2 years, and that's been driven by a whole host of things, but sort of geopolitics, the economy, et cetera. You need sort of a very stable environment for IPOs to be well received by the marketplace, and we're starting to enter that environment. Just last week, we saw a pretty strong IPO market, particularly sort of in tech and healthcare. The second is on the company specifically, They specialize in that area where IPOs have been in a drought, technology and healthcare. And lastly, as this sort of improvement happens, we should see operating leverage and margin expansion because, as you know, banking is a people-intensive business. And so when during down cycles, you unfortunately can't cut sort of all your staff. And so you benefit on the flip side.
Why do you think IPOs are now beginning to pick up?
Well, they're beginning to pick up because, well, a couple of things. First, the geopolitical backdrop has normalized. Earlier in the year, tariffs, the different wars, whether it's in the Middle East or Russia, Ukraine, and if we go even further back, as you know, in 2022, the SaaS technology ecosystem effectively imploded, and so you had a flight away from the space. And I think more importantly, a lot of small to mid-sized technology companies had to show that they can reach profitability or at least demonstrate that by the time they become a public company, they will be a profitable ones. If you go back to 2017, 2018, a lot of these companies were able to come to the market with a pretty bad margin profile merely on the basis of top-line growth. The world has changed since then. It's taken some time for the adjustment to happen. And I think that we're now ready for some of these companies to go public, and that should benefit Piper as an investment banker.
Good to know. All right, let's get to your next pick, which is Freeport-McMoRan. This is on copper and how much of it is needed to electrify everything. Why this play? Yeah, so for Freeport specifically, there are two drivers. The first is an underlying view on the commodity, right? You have to be positive copper to buy a copper producer. And the reason we're positive on copper is that, as you say, the electrification of everything, but also the very aggressive data center build out, which could exacerbate copper shortages. Data centers and all these type of infrastructures are far more copper intensive than traditional electric demand. And so that's a positive for copper, and it'll provide a pretty reasonable floor in our view. Additionally, whether it's a sort of a resumption of global growth, particularly in China, we could see a cyclical uplift in copper demand. So the combination of global growth, AI, and electrification, we think supports copper very, very nicely. Secondly, on the company specifically, great assets, great jurisdictions. And as you know, for sort of commodity companies, down cycles are really what are dangerous for these companies when they can't really get the price that they need for these assets. Well, the only remedy to that is having a long asset life, and Freeport has a long asset life. And if I'd add one more sort of benefit, which in our view will serve as a bit of a catalyst in the coming quarters, is that the company produces really high margin gold byproducts. And as a consequence of the elevated gold price, we could see some surprise to earnings estimates. Okay, good to know. We're going to get to your last pick here, which is Harrow Inc. Tell me about the company. They do eye care, but specifically?
Yeah, so going back to our comments on healthcare and the house being on fire, we think that this is an asset that is worthy of investors' interest. And the reason being, they are sort of a ophthalmology-focused biotechnology company, and they focus specifically on anything that involves the eye. There are sort of three factors when you look at these types of companies that you need to pay attention to. The first is, what are their drugs? What are the addressable markets? How big can these drugs be? The second is how easily can they get these in the hands of patients? And lastly, how sort of run is a company well run, et cetera. On the drugs specifically, there are two that are sort of very interesting to us. The first one is VEVYE, which is a drug for sort of dry eye sort of symptoms. And it's shown to be pretty efficacious. The sort of the ophthalmologists and the experts we talk to say that they're prescribing it to their patients, and so we view that as a positive. The second is IHEEZO, which is an anesthetic used for various surgeries, particularly cataract surgeries. What is interesting about this drug versus others is that the time of anesthetic from a patient to patient is not variable. So other anesthetics have a high degree of variability from patient to patient. So if you put the drug on one patient, the anesthetic might only last 18 minutes versus the other 25 minutes. That's a bit painful for the procedure. In IHEEZO's case, it's very stable across different patient populations. And so we see them as being able to take market share with those two drugs. The second driver is they have a compounding business. So if you have a optometry clinic and you have to compound specialty drugs for your patients, they do them with Harrow. Consequently, their cost of customer acquisition is very low relative to other companies. So we think that they can get to the customers. They have drugs that we like. From a revenue base of, call it, sort of almost $300 million today, we think that they can get to $1 billion within the next 3 to 4 years while sort of tripling margins. So we like it.
Julien, thank you for that. I hope that gives our watchers some ideas for investing. Thank you for watching us on Market Call. We'll see you again tomorrow.